Welcome to today's Postgrad Insights session. Today's session is brought to you by UCL. They've got a special MSc Law and Finance program special that they're going to talk to you in more detail about how you can apply, what it is that makes the program or course so unique and different, especially studying it at UCL. I'm joined today by Program Director Professor Penn. But before I hand you over, just a reminder that today's session is live. If you have any questions, please pop it in the chat or the Q&A box. If you are watching on Facebook or Instagram today, please make sure you put your questions in the actual post session, and I'll try and put your questions into the chat facility live on Zoom if you're not watching via that means. And if you are watching on demand, if you're watching post 7th of November 2025, then you need to pop your questions to webinars@postgradsolutions.com. But for now, over to you, Graham, and I'll see you guys for the Q&A at the end.
Thanks, Gareth. Welcome, everyone. I'm super excited to be here and to talk to you about our new graduate program in law and finance, which we think is unique. There are other courses that offer an MLF combining law and finance, but I think we're the only one that tried to do that in the way that I'm going to hopefully describe to you today. So if we can move on, Ellie, to the next slide, please. So this is an intersectional course delivered by the Departments of Laws at UCL, which is one of the world's leading law schools. The UCL School of Management, UCL Department of Economics, also world-leading departments. And the really key thing is that we deliver this course together. If we can move on, Ellie, so I can describe that in a little more detail. So this is designed, the course is designed for a new generation of financial leaders. We'll be talking to you in a moment about who delivers the course. They are financial leaders and have been for most of their career. But the first bullet point here is the key one. It's the transdisciplinary delivery of the course that we're seeking to achieve. So this isn't just the integration of law, finance, and economics, where we're looking at the underlying theory of each and talking about how they work in practice. We're combining them. The real magic of the UCL MLF, which I think is unique compared with any others, that we look at the underlying theory, we apply it in practice, and we have pathways, which I'll go on to talk about, that explain how those underlying theories are actually applied in the real world of corporate and finance. So we'll move on to that. If you can move on, please, Ellie. So this is an indication of this wonderful faculty that we have, a combination of leading academics and practitioners. I'll quickly run through some of them. Chris Hale is a market leader in private equity, has been involved in the practice of private equity since its inception in Europe. Jonathan Haynes is a full-time member of the academic staff here at the law faculty at UCL and has for most of his career been a finance lawyer at one of the leading English law firms, Ashurst. That's a very younger version of me. I have spent my entire professional career at UCL teaching, but I think more than that, that's relevant for this course. I was also until very recently the co-head of the global finance practice at Sidley Austin, which is one of the world's largest law firms. Alex Gabenko is a leading economist in our School of Management, has worked in the States and in the UK. Alex Wood, again, an honorary professor here, who is a world-leading expert in corporate insolvency law, primarily relating to cross-border restructuring. He's joined by Penn, who's a full-time academic here that teaches restructuring with Alex, and Pedro is another full-time academic that spent some time with the World Bank, who also delivers the core finance module dealing with some of the legal aspects. So if we can move on, please, Ellie. This gives you a sense of the way that we've structured the program. And again, I think there are aspects here that are really quite unique. We're conscious that the cohort, and the first cohort that we've had this year is a good example of that, is typically a really good mix between those with an economics and a finance background and those with a traditional law background. In fact, this year it's almost a 50-50 split, which is excellent. In order for people to come on the course and be in a position where they can understand whether it's the law or finance, if they're coming from a different discipline, we have pre-sessionals, bespoke pre-sessional courses that are taught before the course actually is delivered. Some of these are delivered asynchronistically over the summer, and there is an in-person week where you effectively come along the week immediately before the start of the term to do in-person lectures as well. And those are run both in the laws, the core law modules, and the core finance modules. So by the time you start the course afresh at the end of September, beginning of October, you'll have a good foundational grounding in the disciplines that are required. You'll see that what we then do in term one is split the core modules between the economic and finance modules, which are economic foundations of regulation and government, investment and asset management, and the theory and practice of the law of corporate finance, which is the core laws module. In the latter case, that runs for the entire duration of the course, so it runs for 2 terms. The economics and finance courses are split between the terms, and in the second term, you'll see that you take corporate transactions and restructuring. I'll talk about the optional courses in a moment, but those core courses, effectively 4 core courses, comprise about 70% of the course that you'll be taking. What we then do, and this is the sort of underlying magic that I talked about earlier, so in those courses, you're going to be looking at the underlying theory. We're going to be looking at how that theory is applied. But then when we actually go on to look at how it's actually applied in practice, how it effectively applies in the real world, we have these unique pathways that we really run from the end of the teaching year, which is at the end of May, through June and July. And there are 3 pathways, 2 of which I think are particularly relevant. The first is the work placement, the second, the deal simulations, and the third, the independent research essay. We can flick on Ellis, I can talk about those in a little more detail. So the laws pathway in terms of, these are the optional subjects. So in addition to the core courses that I've just been talking about, you'll be able to take 1, well, 2 if it's half courses, but effectively 1 of these courses on either the law pathway or the finance pathway. And you'll see that there's a really good spread of options that are available to be taken there. We can move on, please, Ali. These are the learning pathways which I was particularly keen to talk to you about, that give the ability to apply the underlying theory that we study during the courses in practice. The deal simulations run for a period of 8 weeks, as indeed do the placements, which I'll come to. The deal simulations are structured around real transactions, and we work with practitioners in the market. These are held at the offices of law firms. And you will be given preparatory work and documentation in advance. I'll talk about which law firms we use in a moment. The placements are going way beyond what you would get in a normal summer school placement, the normal placement that you'd find with a law firm or a financial institution, which are typically relatively short term. These have been developed specifically for the purposes of this course. They run for 2 months. They're with the same institution, whether that's a law firm or a financial institution, and you'll be working on live transactions at that particular firm. The research essay is for those that are looking to pursue a career in academia. We expect a few people to be choosing these because most people will be looking for the application of the underlying theory into the world of practice. And to do that, you'll need to follow the deal simulations or the placements. But if you're looking to pursue an academic career, we offer the research essay pathway as well, which is an independent research essay that is delivered again with a focus on the transaction between economics, finance, and law. Move on, please, Ali. This gives you a sense of the world-leading firms that we have this year as our placement and pathway providers. So Clifford Chance, Norton Rose, Skadden, Maybrand, Travis Smith, Reed Smith, Sidley are global law firms that focus on corporate and finance. As did Gibson Dunn. Interpath is one of the leading advisors in the restructuring world, and they are offering placements covering that work. The European Bank for Reconstruction and Development, I'm sure most of you are aware of, is a dedicated bank that is operating primarily in Europe and in Eastern Europe. We can move on, please, Ali. So the deal simulations that I talked about earlier will be delivered by 4 law firms, together with academics here at UCL. And the approach will be for the academic to introduce the cohort to the simulation, which will be a real deal that's taken place relatively recently. The deals have been structured in order to cover all aspects of the course. So we have a deal that deals with private merger and acquisition, a deal that deals with a complex cross-border restructuring, one that looks at complex structured finance. It's a securitization transaction this year. And then finally, a highly levered loan finance transaction, which is the sort of financing that you will see in the private equity market. The idea is that we will, throughout those simulations, be able to apply the underlying law by looking at the documentation that is used in those transactions and understanding how the deal is structured to address the underlying economic drivers or the legal issues that arise. Thanks, Ellie. If we could move on, please. Yeah, I think I've talked about the placements enough. It's 2-month placements with a firm, and at those placement counterparties, if you worked at Interpart, you'd obviously be looking at a restructuring transaction during your time. If you were somewhere like Sidley Austin, it's likely that you would be doing something that is highly levered. We'll talk about those placements when you're with us, what each offer, because they'll be quite different, but they will all be looking at the intersection between economics, finance, and law. Thanks, Ellie. Yeah, I don't think I need to say anything about the independent research essay. I've touched upon that, so we can move on. I think this is the point, that the students will gain a unique mix of theory and practice. I'm repeating this, but it's really important that you understand that what distinguishes the UCL MLF is the application of the underlying theory to the real world of practice. If you can move on, please, Ellie. Okay, so what I'd now like to do, and I'm going to try and do this very quickly, is give you a sense of what I mean by that, by sort of looking at some of the issues and talking very briefly. I mean, I can't capture everything in 10 minutes, but to give you a sense of how we would do that. So if you could move on, please, Ali. So I'm going to try over the next 10 minutes to give you a sense by looking at 3 areas, what the underlying fundamental economic theories are that underpin key corporate and financial decision making in the market, touch upon some of the economic drivers, some of the legal issues, and talk about how we would think about them in the course and then how they might apply in practice. So we could move on, please, Ellie. Actually, let's move on because I'm talking about those. I'll come back to those. So the first one I wanted to talk about very briefly is the pricing of debt, which sounds pretty fundamental, but it's one that is glossed over by most professionals in the market, certainly lawyers and economists. Very briefly, the way that debt is priced comprises 2 elements. You have the element that deals with what is referred to as the margin, which is looking at the credit risk that is being entered into when debt is being made available to a borrower. That's all referable, obviously, to the ability of that borrower to repay, which is why we call it credit risk. And then the second part, which is often ignored, which is really important, which is the market cost of money. In addition to that, we have regulatory costs, but that's not terribly important for the purposes of today's discussion. So the market cost of money has historically been based on the back of something called LIBOR, which probably most of you have heard about because it's been in the press quite a lot over the past 10 years because of the scandal. The vast majority of the money that circulated in the world and debt that was made available was based on LIBOR. And this figure, I mean, I still find it quite astonishing to think that it became this large. LIBOR dictated contracts that were valued at 450 trillion. That's what that number is. It was by far and away the world's most important number. And it governed the cost of debt everywhere in the world, from domestic debt, credit, student credit cards, student loans, everything to very high complex finance. If you can move on, please, Ellie. By the time the crisis broke in 2012, which is when there was a big scandal about LIBOR, the market was completely dysfunctional. And it was dysfunctional because the $450 trillion in value of contracts that I'm just talking about was based, in terms of the market cost of money, on underlying transactions that were valued at only 500 million, which is what that inverted pyramid is trying to show. If we can move on, Zoe. In the course, we'll give you an understanding of what LIBOR was and how it was developed. I mean, LIBOR has actually effectively departed almost. It still applies to European loans, certainly those based on Euribor, but in most jurisdictions, LIBOR has actually been replaced by something else. But understanding what that something else is still requires a pretty fundamental understanding of LIBOR, because LIBOR is where the market cost of money was developed, and understanding the differences gives you a really good grasp of how that then is applied in the market today. If we could move on, Ellie, so I can just briefly touch upon that. So to give you a sense of the depth of the underlying analysis that you go into it in this particular course at UCL, we'll start by looking very simply at the way that debt was originally priced. I mean, how historically did banks, because banks until probably 15, 20 years ago were the dominant lenders in the market, how did they originally base their market cost of money? Well, they did that historically on the cost of deposits that were placed with the banks, which they then added a margin to by making loans to corporate borrowers. We can move on, please, Ellie. That changed quite dramatically in the late 1960s, early 1970s, when a Greek banker called Minos Zombonakis developed what then became LIBOR, when the first syndicated loan was structured on behalf of the Shah of Iran. It was a relatively small syndicated loan at the time, 80 million, but 80 million was worth quite a lot in the late 80s. And the big magic that he had to address was how you can look at the underlying cost of money for a large group of bank lenders. Syndicated lending brings together a number of lenders, all of which have different costs of money. And because a syndicated loan is a single loan contract where you advance money to a borrower with a single rate of interest, there was a need to find a mechanism where you could bring the underlying interest rates that were being charged by each of those banks together. And that was done by developing what became known as the underlying cost of money, which then became LIBOR, the London interbank offered rates. And that was the rate of interest that was charged to each of the bank lenders and aggregated across in order to give you an interest rate that would apply to the entire loan. The underlying mechanism is far too complicated for me to go over in 10 minutes, but I wanted to give you a sense of the depth of the analysis that we will be going into to explain this to you. If you can move on, please, Ellie. And what that then gave was an interest rate that applied in the market for a particular period of time. So LIBOR did two things. One, it gave you the market cost of money that would apply in the market, and it gave you the ability to convert what would be a fixed rate term loan into a floating rate loan. And what this particular diagram is trying to show is a term loan of 5 years that is effectively divided up into 20 quarters. A quarterly LIBOR quote is the most commonly used in the market because it's the one where you have most liquidity. You have most people that are providing the quotes, and you would have an interest rate that would roll over at the end of each quarter. And so, although we call this a floating rate loan in the market, this is the way that market floating rate loans are structured. What a floating rate loan is effectively a combination of rolling 3-month fixed rate loans. So the LIBOR quote is fixed for a period of 3 months. It is requoted again and then fixed for another period of 3 months. And that then gives you that underlying floating rate. The margin component of the interest rate, and this may surprise a number of you, is actually fixed at the beginning of the transaction. So the credit assessment that is made in the case of a 5-year loan is fixed on day one. That has some interesting implications of how the deal documentation is structured that we'll go into in great detail, but that's only one part of it. The second part of the interest rate, which reflects the underlying market cost of money, is based on the mechanism that I just described. Now, if we can move on, Ellie. The next slide gives you a sense of how that has changed since we've moved very recently in the past 2 years from LIBOR to what is now SONIA. This is in relation to GBP loans, and we'll be talking about loans that are governed by SONIA and by other interest rate mechanisms that apply today for US dollars, for example. What this is trying to show you in the red as opposed to the black is how SONIA is transposed onto it. So SONIA is not based on a 3-month revolving mechanism. It's based on overnight deposits. This is the only way that the regulator felt that the market could not be manipulated going forward. One of the big problems that we had with the old LIBOR regime was because of the global finance crisis, banks were not lending to each other. And so instead of giving quotes that would then feed into the LIBOR calculation, people were giving estimates that were not based on real transactions. And it was that gave dealers and traders the ability to manipulate LIBOR, which is what the scandal was all about that you've probably heard of. The regulator wanted to move away from that to make it transparent. And the only way we could do that was to go into an overnight market rate that would then need to be manufactured and applied in a way that could give you the cost of money over effectively the same periods that we were looking for LIBOR. And in order to do that, SONIA has to start 5 days before the loan is advanced and 5 days before each interest rate period is actually quoted. And it is compounded in order to give you the term rate. Instead of applying LIBOR for 3 months, you compound it each day because it's a daily rate. In addition, because it's an overnight rate, there is no credit risk embedded in SONIA as there was with LIBOR. When LIBOR was based on rates that were given between banks and the market, there was a credit risk associated with effectively lending to a bank even for 3 months. That is not present in a market where it's an overnight market. If you're lending money overnight, the underlying credit risk for making that deposit overnight is very small, if indeed there is any risk associated at all. So you need to include something called a credit adjustment spread. I'm trying to give you a sense of just the difference here. We will look at those differences in great detail and then enable you to apply those differences and understand them when we go into the documentation. So today, if you look at the documentation for a loan issue, for a bond issue, for anything that is creating a debt instrument in the market, the instrument will have pages and pages of clauses that address the interest rate mechanism, which is SONIA. And why do they have pages and pages today versus what was effectively a very simple clause under LIBOR? They have that because of all the changes that we've had to build in to make SONIA look like LIBOR. So I'm trying to give you a sense of the approach we will take by looking and thinking at the underlying theory and then looking at the documentation that applies that in practice. If we can move on, please, Ellie. Let's just move on. I'm going to quickly look at something else now. I'm going to look at leverage. Again, I'll keep this very short indeed. So one of the things that we will be looking at in the course is how you value an acquisition. We'll be looking at public acquisitions and we'll be looking at private acquisitions. And in addition to looking at the underlying theory of how you value a target company, what this diagram is trying to show here is a typical acquisition transaction. This is a private equity transaction, but public transactions are not dramatically dissimilar, where the underlying acquisition target are the companies at the bottom, the target company and the underlying subsidiaries. And the way that transactions are typically structured in the market look highly complex. And they look highly complex because of the way that the capital that is being used to buy the underlying target companies is structured. And the whole purpose of this, well, I said the whole purpose, the major purpose of this is to reduce the underlying cost of capital that will then be used to acquire the company. So in a classic structure, as we see here, we have equity going in at the top through the green structure, and that equity will typically be less than 20% of the capital value of the company that is being acquired at the bottom. And then we have debt, different forms of debt that is added effectively to that 20% of capital that is then used to acquire the company. And the further up the structure you go, so if we start at the top with high yield bonds that go into the subholding company, the further up the structure you go, the higher the risk. And the higher the risk is because you're further away from the assets. When you're buying a company, a target company at the bottom, the providers of capital, in this particular case, it's debt, it's the senior lenders and the mezzanine lenders. The closer those lenders are to the assets, the more protected their position is going to be because they're going to be secured over those assets. The further away you get from the target companies and its assets, for example, the subholding company that is issuing the high yield bonds, you are having to go through what we call structural subordination. So you're having to channel the proceeds of the business that is being generated by the target company up through the purchaser, which is the original borrower, into the subholding company that sits above the borrower in order to make payments to the high yield bondholders. So their risk is at least one step removed. Furthermore, in order to channel money then to the investors and the sponsor, which is the real equity in the deal, you're having to go then through a further level of subordination, structural subordination, up to the parent company. So dividend distributions will have to be made through the structure in order to pay that through the top. What that means is the risk will reflect the cost of capital. And it's therefore hardly surprising that the highest risk capital, which is at the top, which is in the green box, is kept as small as possible, because that is the highest cost that you're having to pay. The lowest cost, the senior loans at the bottom, will typically be the largest component or the largest proportion of the capital that's put in the deal, because that is the lowest cost. Can we move on, please, Ellie, to the next one? Tranching, we move on to the diagram. This is an alternative structure to that gives a better sense of how and why tranching can actually significantly reduce the cost of debt. And what I'm looking at here is tranching not only in relation to structural subordination, and forgive me, I'm being highly technical here, but hopefully you understand that in the context of the past diagram, the last diagram I looked at, where you were feeding money up through the structure that was structurally subordinated. What this diagram is trying to show is how you can tranche debt contractually. So the subordination between the senior and the subordinated debt at the top is typically tranched through contractual subordination. So there'll be intercreditor arrangements between the provider of the senior debt, the provider of the mezzanine debt, the provider of the PIK debt, that will regulate the way in which money is repaid to them, i.e. the providers of the senior debt will get paid first, the providers of the PIK debt will get paid last. The equity at the bottom is where the structural subordination comes in. And these two features, so structural subordination and contractual subordination, are typically seen within the same transaction. It is typically, this is the market that we typically see today. And we see this market today for lots of reasons. One, because it reduces the overall cost of capital. And secondly, because it reflects the way that the market has moved in terms of the providers of debt finance in particular. Historically, in the 70s, 80s, and 90s, until really the global finance crisis, the market was dominated between the regulated bank lenders and the debt capital markets. Today, that is completely different. The debt market is almost evenly split, actually, according to the figures that I read today, between regulated banks that are now highly regulated and therefore can provide much less debt than was previously the case, and what is labeled the shadow banking sector, but for our purposes, private credit. These are typically funds that are part of multi-strategy private equity providers that are providing debt in the market in competition with the banks. The big difference, of course, is that the returns that that private credit industry is seeking to generate is typically higher than the returns that are being generated by the banks. And so they're coming in as subordinated lenders, but they're typically in similar deals. And so we'll be looking at the way these transactions are structured to provide both types of debt. We can move on, please, Ali. So how are those real world issues come up? I hope what I've tried to do very quickly, and I appreciate I've been giving you a lot of technical information here. I'm trying to give you a sense of the depth of the analysis that we will go through in order to cover the course, and then you'll be looking to apply that. So the beauty of this MLF is that what I've just been describing will then be actually visited either in the placements or in the deal simulations. And I think that's probably enough for me. So if I can now pass over to my colleague Jen Hart, who is in our graduate admissions team, and Jen will talk to you a little bit about the graduate admissions process.
Hi everyone. Okay, so the applications for the MSc Law and Finance is currently open for the September 2026 start date. In your application, you should submit your academic transcripts, a personal statement, and 2 references, one of which has to be an academic reference. You are also encouraged to submit your CV if you have one. We don't require a GRE or a GMAT score for your application, but if you have this, then a strong quantitative score can add weight to your application. Before you apply, please make sure that you've carefully read the personal statement criteria, which you can see on our website. There are two deadlines depending on whether you need a visa or not. So if you need a visa to study in the UK, then the deadline to apply is the 1st of April. If you don't need a visa, then the deadline is the 28th of August. Applications are considered on a rolling basis, and you'll typically receive a decision within 10 weeks of submitting a complete application. A complete application means both references have been received as well. We generally recommend applying sooner rather than later, and that will help you prepare for the year ahead as well. For example, you will need to have an offer for the programme before you can apply for priority accommodation at UCL. Next slide, please, Ellie. So, entry requirements. We have a cohort of around 50 students, and that's to ensure the best experience for and the support for the students. This means that there's no automatic criteria for automatic admissions. So each application will be fully assessed by subject expert academics in law and finance. This means that you can position yourself well by using the personal statement or your CV to highlight anything beyond your academic transcript and to clarify why this programme is best fit for you. Our minimum entry requirements is a high 2-1, which is equivalent to an average of 68% across all years or an international equivalent. So you're welcome to send us an email if you'd like to know the precise equivalent of 68% or a high 2-1 in your jurisdiction. Most of our applicants will meet the academic criteria, but we may also consider applicants who are close to but not quite met the threshold. For example, students who have excellent and relevant work experience. In the Faculty of Laws, we require level 4 English. So that means if you're taking the IELTS, that would be an overall grade of 7.5. If it's the UCL pre-sessional or the pre-sessional English we will require 75% overall. Or if it's a TOEFL score, then it'll be 109. We also accept a recent 3-year qualification in a country that UCL considers majority English speaking, and you can find that information on the UCL website to see which country falls within that list. Next slide, please, Ellie. So scholarships and bursaries, if you are interested in securing funding for your studies, then we recommend that you start looking now for any opportunities that you may be eligible for, because scholarship deadlines do come very early. For example, the Chevening and the Commonwealth scholarships. UCL also offers master's scholarship for both international and home domiciled students. Their application deadlines are around about May or June next year. You can check that on the scholarships, the UCL scholarships website. In addition to UCL-wide scholarships, we also have a fully funded scholarship consisting of fees and a stipend for students who have been and are of limited means. There's no geographic restrictions on this scholarship, but students must meet the financial criteria and also not hold a master's level qualification already. As we have a small number of scholarships against a high volume of applications, this process is extremely competitive. And we generally recommend applicants to apply for other scholarships and not just the law and finance one. So you can take a look at the central UCL scholarships and funder pages by scanning the QR code that's on the slide here. Next slide, please, Ellie. So if you've got any questions, you can send us an email at mlf-admissions@ucl.ac.uk. The best place to find any information about the programme is on our faculty website. You can book a one-on-one consultation with the programme officer. And if you'd like to do this, you can scan the QR code that's on the left-hand side of this page. I hope you found this session helpful, and I'll pass back to Gareth now, who will lead the Q&A.
Thank you, Jane. Appreciate it. Much appreciated. And to Graham as well. Can we just keep on the theme of kind of the admission side and when students are joining? Because such a huge factor is them moving to the UK. You know, you mentioned visa already, and yeah, you know, the change that might happen and the effect it might have on a student. Um, how important is it when they are looking for the right program in the UK that they're not just looking about what they're going to study, it's where they're going to study also, Jane? Because I think you've just touched upon it there, you know, to find out more information and to really do research and make sure everything is spot on. How important is that to a student?
Yeah, so I think that, you know, when you're looking for a program, you should also be looking at what sort of experience you'll have as a student whilst you're here. And we are located in an amazing place in London. You know, we have access to so much of like culture, lots of like social opportunities. You know, we have the law firms and you know, finance companies that are like nearby. It's I think you need to take into account, because you'll be spending a full year here, that you need to be thinking about what other things will be bringing, you know, along with your masters and what you learn on the masters, or everything else of you know, that will add to your experience here as a student. Yeah.
And you said the word culture there. I think that's quite an important word, isn't it? Because in effect, most of us have been to London, if you haven't been before, that are on the panel in terms of in the UK. It's a bit of a home away from home, isn't it? And you do know a lot of people from your respective countries and whatnot. What does that make for the classroom sizes? What does that mean to the actual classroom itself? That must mean a variety of opinions from different cultures and backgrounds. It must make for great classrooms.
Yeah, so you'll have people from all sorts of different countries. I mean, UCL itself is you know, it's a global university. That's the tagline. So you will always meet people from either your home country or from, you know, from everywhere around the world, and it's really good for networking, for your to making those connections that you will bring into your career in the future. It's an excellent place to be.
Superb.
Actually, I should add to that,
Well,
Gareth, if I may, because I look at the cohort that we have this year. It's not just multicultural. I mean, it is completely diverse. I mean, we're representing 28 different jurisdictions, and the cohort is even smaller this year. We've kept it very small for the first year, very select indeed. And it's, you know, remarkably fused. We're only 6 weeks into the term, and it's already, I mean, we're having events where people are attending that. I should also say that the delivery of the course is split between 2 campuses. So UCL's main campus is in Bloomsbury, which is, I think, one of the best parts of London. It's great, all the culture that we have here, universities, museums, art galleries, etc. But the finance offering is offered at Canary Wharf, which is the financial centre of London. It's a separate part. It's just across town, very close by. And so students will get the experience of studying in both, which you wouldn't get anywhere else. You have, you know, the centre of, you know, academic and cultural excellence, and then the business world, which is, I think, a great combination.
and Graham, I'm pleased you mentioned about the cohort this year in particular. One of the biggest improvements and increases we've seen in the type of student have been the increase of mature students. And I think there's this misconception of mature students. People always think, oh, it's 40, 50-year-olds. And it's not actually, it's students that have graduated, they've done their undergrad degree, they go and do their life experience, they go and fulfill their career, and they come back at a late stage. I would imagine with the MLF, it's very similar to that. People go off, they enhance their careers, and then they come back and fulfill what they wanted to do earlier.
Some of them are that, but what we're finding actually is people are not fulfilling their careers as such. They're realizing they need something else to fulfill their careers. So what we found that, yes, yeah, that there are many students actually on the current cohort, and I expect this will be the case going forward, that have some work experience, but it might be just 2 or 3 or 4 or 5 years. They may have gone into a finance position, they may have gone into a legal position, they may have gone into a different position entirely. They then come across the sort of issues that we're talking about, and they realize that in their day-to-day job, okay, they're processing the work, but they don't really understand the underlying issues that they're thinking about at the depth that they would like to. So they want to have a different experience when they're working. They might want to take their career to a different place, but they might want to just be better at what they do. We found a lot of people applying saying, I didn't really have the opportunity to look at the underlying economic theory, to look at the underlying legal theory, and I'm dealing with it day in, day out. So they come to the MLF to give them a broader and better understanding. Now, one, is that going to give them, a better experience when it comes to day-to-day work? Yes, of course it will. But it's also going to give them a position where their career prospects are going to be significantly higher and greater.
Yeah, and I know there was a great question earlier, actually. It was on Facebook, and apologies I didn't get the name of the person, but they were asking about what course and program would be better with what background. Is it law? Is it finance? What's better suited towards applying for this course? And I know that's kind of the merger where that's taking place, and that's the road that course is going down. How would you answer that? And what would you say to that student that has perhaps law background rather than finance and doesn't really have kind of a numbers brain, if that makes sense?
Yeah, and it's difficult in 40 minutes to actually try to give this flexibility. What I was trying to capture in the presentation was, one, the underlying depth of the analysis, but two, the flexibility in terms of the actual way you build the MLF. Now, first and foremost, I've got to say that the core of the MLF assumes that you will go away with a fundamental understanding of economic theory and legal theory that applies to the world of business. And what is that? It's corporate and finance. So there's a base at which a law student will have to understand the economics. There's a base at which an economics or finance student will have to understand the law. What you can do on top of that is then curate the MLF through the options that you've got. If you are focusing more on the laws path, you'll get that underlying base economic understanding through the core economics course. You'll obviously be familiar and be able to cope well with the law side. And then you will be choosing options, I would think, like private equity, like restructuring, that will take you down the laws path. So you're going to reinforce some of that law. If you're thinking more that your career trajectory is in the finance world, you'll get that underlying core law component in the core course. And I would have expected you to then look in the optional courses at more economics drivers. So the makeup of the MLF will differ depending on where you're going. I mean, we found this year, actually, that some of the economists and some of the lawyers are looking to cross the path, as it were. They're looking to do more economics because they haven't done that before. But you can curate the MLF as you like, subject to that underlying core. All of the graduates that qualify with us, that graduate with us, will have a fundamental understanding of either economic or legal theory. It's then what they apply over and above that.
And Graham, I thought there was a great slide earlier where you showed the law and accountancy firms that you guys are partnered with and work with. How important is that? You've already mentioned Canary Wharf, the financial hub of London, that when they're actually graduated from their master's degree after their 1 year, there are so many options to them, isn't there?
I think that's right. But I do think, and I hope I made this point, I think the ability to apply the law, that final 2 months of the course where you'll do those deal transactions, you'll actually look at a simulation for 2 months. You look at 4 actually in that 2-month period, or you'll go and work on a work placement for 2 months. This isn't 2 weeks, 3 weeks. This is 2 months. This is real work. This is looking at a real deal simulation where you get real practical experience, and it's working with people who are in that market. I think that, together with an MLF from UCL, that combination is very, very powerful.
Yeah, it's a great. Someone actually asked earlier, can you give me an example of a case study, or what kind of practical simulations can they expect to work? And I think you've hit the nail on the head there.
I can give you. Does it help if I give you a little bit more of that? So if
Yeah,
we
of course.
talk about
Yeah, please
a
do.
very complex. I'm working on one myself at the moment, and I should say that all of these deal simulations and placements I have actually developed with these law firms myself. I've been putting an awful lot of time and effort into them, and they're all bespoke. This isn't something that is being delivered anywhere else. So the most complex one that I think we look at is a complex financing. It's called securitization in the current market, and it's looking at raising finance in the capital markets. And what we're going to be doing in that transaction is actually setting up, okay, why are the parties doing this deal? What are the underlying economic drivers that persuade the client that they wanted to do this deal? We start by looking at those. What are the real economics that drive the deal? Okay, that's fine. Some of them are regulatory, some of them are purely economic. Now, how are those addressed in the documentation itself? So we then sit down, and for a day and a half, we'll sit down with the law firm, the partner that led the transaction. We'll go through the structure of the deal. How is the deal put together? Who are the parties? What are the roles of the parties, and what do they play? But critically, what documentation is used and what is the objective of the documentation? And then students will go away, think about it, we'll post some questions, they'll go away, think about it, and then come back, and then we'll have 2 or 3 days where students will have the opportunity to discuss their understanding of how the law, the regulatory drivers, the economic drivers have been applied, what legal issues have arisen, how those issues have been mitigated. Now, does that mean they're going to be able to go away and draft the next deal? Of course it doesn't, but they'll have a really good, deep, fundamental understanding of what drives that market.
Excellent. Jane, if I can come to you at this point, we heard towards the end of the presentation the admissions-y types of questions, which is great. You mentioned it's an extremely competitive application stage. You know, the amount of applicants you get far outnumber the amount of spaces that are available. Therefore, it's so competitive. What are you looking for within a student? What kind of background, and what are you looking for on a personal statement that makes you go, that's the student that's for us, or that's not what we're looking for?
I would actually move this over to Graham, because
Oh, of
Graham
course.
actually
Yeah,
looks
yeah.
at the applications and probably is best to answer that. Yeah.
Graham, over to you.
Yeah, sorry. Thanks, Jen. Yeah, apologies. I should have made that clear. I am actually the admissions person here as well, because I'm taking this very personally and want the best students coming.
Yes.
I'm glad you raised that, because I wanted to jump in earlier. The personal statement is really, really important. We want students who understand what we're trying to do. So this transection, as I call it, the intersection of economics and law, what that really means and why students are excited about that is something that they need to get over in their personal statement. You know, why is it that you want to come here to do this very demanding? And it is very demanding. It's a great experience. I'm sure you love it, but it is challenging. And you don't come to UCL if you don't want to be challenged. But I want to see in that personal statement that they understand that they understand what they're coming to do, and critically, why. Why is it that they think this MLF is going to transform their lives? Because it should. And we're expecting references that will then reinforce that as well. The references are really important. We ask for 2 references, and we expect real references, but the personal statement is really, really important.
Great. And in terms of students watching this today, whether it's now, in the future, they're looking for next September, what one piece of advice, Graham, would you give them? What would you say is the be all and end all to make sure that before you apply, you do? Is it that personal statement? Is it to make sure that you've got the required background that's needed to fulfill the program? Or is it anything else? What would you say that would be?
I would say it's an understanding of what this program seeks to achieve. I would look at the website. I would look at other references that we've made that talk about what the program is. I'd look at the underlying courses that are offered in the program, so you have a good understanding of what those courses contain and why you want to take them. And I would, first of all, that should actually persuade you one way or another whether you want to come to UCL. But then if you want to come to UCL, I would then curate your personal statement around those objectives. Make it very clear that you have a really good understanding of what UCL's MLF is all about.
Excellent. And this is to Jane as well. Jane, if you want to answer this, feel free. If not, Graham, absolutely. Law is always evolving. Numbers is very universal, but law is always evolving. How do you ensure that the practices that the students are being taught and everything that comes with it is still relevant? And how do you move with those times? Graham, if
It's
I can
probably
start with
fair
you,
if
and
I
then
pick that up. Yeah, I think there is no course that we offer that is, more able to do that than this, and that is because this course is being taught by leading academics and leading practitioners that are working in the market today. And what we are teaching is what is happening in the market today and what is going to be happening in the market tomorrow. We're looking at the way the corporate and finance markets are developing. And I know you're focusing on the law, but it's not just the law. It's the law, and it is the business of of corporate and finance. So whether this is working in an investment bank, whether it's working in a private equity house, etc., we're looking at where that is shifting. So my example, as I talked earlier about the transformation in the way that money is priced, that might seem a small thing. It's really not. It's a really, really important development in the market, and it's changing as we speak. Do I expect Sonia to stay as it is? I don't. I expect it to be refined and developed because it's not quite fit for purpose at the moment. We'll talk about ways that might happen. So students that come on the course will have a sense of that. We're seeing changes in the regulatory framework at the moment that are, slightly changing what banks can do and how they can do it. And therefore, the way that private credit and the shadow banking sector will react to that. We'll be talking about what those changes are. So this is really looking at corporate and the corporate and finance world and how it's operating today. There's no question about that at all.
Superb. What do you find most students do when they've, it's a very, very unique program and course, and I think the fact that you get that couple of months, first-hand case studies, finding out from people within the industry exactly how they negotiate, how it works, is fantastic. What is it students go on and become post-graduation? Do they stay within London? Do they go back to their respective countries and become, in positions of power within these accountancy firms, within legal firms? What would they become?
The whole range of things, but I think they go all over the place. I mean, do I expect some to focus on the world's leading financial centers? Yes, I do. I mean, the nature of the course will mean that many of the opportunities that people will be looking for will be at places like London, like New York, like Hong Kong, and increasingly actually even in the Middle East today. So, if you are wanting to be at the cutting edge of private equity, the cutting edge of investment banking, at the cutting edge of global finance with the big global finance banks, law firms and banks, that's where you're going to be. But equally, the market, as we're seeing today, I spend a lot of time, ironically, working in Africa at the moment. And, many countries in Africa, Nigeria, Kenya, are looking at changing their frameworks. And it's becoming much more attractive for people with the skill set that we're talking about to be operating in those jurisdictions as well. The Middle East, the Far East is opening up. The way that they're doing business is global. And so I expect graduates on this particular course to go and become market leaders, whether that's in the finance sector, whether that's in the legal sector, all over the world.
Superb. And we're just going to finish off, and whether, again, Graham, this is yourself or Jane, in terms of the enrollments. We've already heard when the intake dates are, we've already heard it roughly, the deadlines, but can we just reiterate that one more time in terms of any students that are watching, when the program is due to begin, the rough timelines that they need to work towards, and at what stage they can expect to receive feedback? Jane?
So yeah, the deadlines for there's two deadlines depending on whether you need the visa or if you don't. So if you need a visa, you need to apply by the 1st of April. If you don't need a visa, then it's 20th of August. We would encourage you to apply as soon as possible, especially if you are looking for funding, because the funding deadlines are much earlier. So we are open already at the moment as well. So you can, start your application. Decisions are usually made within about 10 weeks of complete application coming in. Yeah, if you've got any other questions.
Apologies for cutting you off there. I presume funding is done at source. It's applied at source. And if they are not eligible for funding, or even if they are, can they source from third parties such as Chevening, to name one? Is that an opportunity?
Yeah, absolutely. So we encourage students to apply for, whatever funding. It doesn't have to be UCL funding, doesn't have to be the law faculty funding. We encourage people to look at external funding too, just because, it's limited on what we can actually offer. And generally, I think most like the bigger paying scholarships, they will have something in there to say that if you're awarded multiple, you have to pick one. You cannot hold more than one award. If you find yourself in that position, then brilliant. But yeah, I would encourage people to apply for as many as they can. Yeah.
Excellent. Okay. Graham and Jane, thank you for your time.
Actually, Gareth, can I just
go on, Graham? Absolutely.
I'm just going to add just one point. I really want to reinforce Jen's point, apply as early as possible. I've actually started looking at applications in this already.
Wow.
We've already started to make offers. So it's a very competitive course. The sooner you apply, the better.
Yeah, absolutely. And thanks for interrupting there, Graham. I think that's so key. Please, any students that have got any questions, don't be afraid to ask. You know, Graham seems a very approachable gentleman, so feel free to ask any questions. You know, you can tell that both Jane and Graham are very passionate about the program. So if you have any questions, reach out to them, reach out to the team at UCL, use the open events, use the QR code you've got in front of you to find out more information, because the more info you've got, the more powerful it will be within your application. So thank you for tuning in. Really appreciate your time today. Graham and Jane and all those in the background as well. Thank you for being part of this. It's been a great session. If anyone has any questions, webinars at postgradsolutions.com if you're watching on demand, or reach out using one of those QR codes. Thank you very much. Graham, Jane, take care.